Hello everyone, welcome all to the 7th episode of Breakfast with Jorge. This is Prerna from Al Circle and we have our speaker Jorge, an LME expert. So, good morning Jorge, how are you?
Good morning. Good morning, Praramna. Good morning, Al Circle. Good morning, India. So pleased to be once again with you in this program, Breakfast with Jorge, which is with me. And by the way, before you ask me, I am having my usual mate, you see?
Okay, let us start with the question like what happened last Friday, the 20th in USA?
Yeah. Well, 20th of February, the Supreme Court of the United States, under a majority statement, decided to rule out, to eliminate the import tariffs imposed by Trump almost a year ago, 10 months ago. And you remember those tariffs were developing higher, changing, muting. But anyway, that was a firm decision based on the illegality. I mean, the key argument was that the executive power was not allowed, it's not allowed at the United States to create, such a tariff. So, what the reaction you may imagine was really very bad from Trump, and he immediately said that he would replace this situation by a 10% tariff, which of course has nothing to do with the 50% of tariff for the aluminum instead. And the statement was very simple, but the impact is extremely high.
Okay, so what is going to happen with the metals market?
Well, I mean, there is one particular metal, which is the aluminum, which was taxed at 50%, and this creates an immediate impact of the demand who has been reduced at the United States of the primary to become once again. And by the way, there are calculated around $200 billion to be claimed to the Treasury of the United States by the reimbursement of the previous tariffs, which, by the way, we pay by us, by consumer, and we are not going to get our reimbursement of the tariffs. So, but this is from the economic point of view, what's going to happen in the United States. But you asked me on the metals. So what will happen on the metals, in my view, is that as a consequence of this new structure, the metal price will be more demanded and the price will go higher. And in addition, if you add up the view of the funds, everything points from the logical point of view of a higher price of the metals. And on top of that, remember that the copper, the key markets of the coppers are the LME and the COMEX. And what might happen is the arbitrage between the copper at the United States in COMEX and the copper at the LME, which, I mean, it was over or around 30% in the peaks, higher at the United States, will go balanced. We have seen some days that the copper at the United States was lower than the LME, but the arbitrage, in my view, will start working. And as far as the other metals, they normally would go with the hand of the aluminum and copper. So my view is bullish on that.
Okay, so what about the rest of the economy?
As far as the rest of the economy, You know, the original intention was to give a strong incentive to the American economy, blocking imports, which are not going to be the case so far. But when the intention is to reactivate the economy throughout the tariffs, it takes a lot of time. So now the economy, in my view, will become reactivated due to the greater pace of growth. Additionally, I believe that the dollar is going to go softer due to the treasury situation, to the higher deficit, which would mean if the dollar becomes weaker, we might expect higher prices on the aluminum. So in other words, I expect a lower dollar, a higher demand on the metals, an interesting prospect of a new growth, which in addition with the change at the Federal Reserve, we are going to have a new guy, a new chairman, Walsh, and he will possibly lower the interest rate. So I think it's going to be a positive shift at the economy.
Do you think the volatility is going to increase?
Yeah, the volatility is going to be the same, in my view. I mean, of course, that you are withdrawing variables of threats of higher tariffs, but at the same time, there are shifts and changes, and the funds are creating volatility. The human being is creating volatility. As we spoke the previous breakfast, that remember the roller coasters on the 90s at the attraction parks. I mean, they were very simple. Now they are very complicated, and the roller coasters are the response on the demand of us, of human beings on the markets. So imagine now it's going to be much, much higher. Both the volatility, the demand of stress by the human beings, and of course, the new roller coasters at the supermarket, at the parks of entertainment.
Tell us something about the margin calls.
Oof, margin calls. Imagine that you have a position in the futures market, okay? So imagine that you buy aluminum and you sell aluminum to your customer, and the price with the customer is not fixed, is floating. So what you do traditionally as a hedge, you would go to the futures market and sell. So if the price goes higher, your invoice to your client will be higher. But with the LME, if the price goes higher and you had your short position, every day you're going to have margin calls. Where's the money of the margin calls? On the one hand, the broker will request you the money every day, but on the other hand, the money is with the invoice or selling to your client. The money is stopped there, so you need to sacrifice working capital to afford the initial margins, unless you have a huge credit line. So you have to administrate the number of brokers you have in order to have enough credit lines not to use your working capital. And this is a whole task which has to be dedicated on the hedging side in order to avoid to get strangled by the margin calls, which is happening during the last month.
Now again, like, which are the key takeaway from
Well,
today's learning?
as always, when building up a hedging policy, you should pay attention very, very carefully of how much you want to dance with the volatility. The more you dance with the volatility, the more profitability you are exposed to. And the less, which is like hedging with futures. You lock in, period, but then you have to take care of the margin costs, as we said in the previous question. But this is a technology, this is an art, and this is risk management. And this is where what we teach, what we educate, what we consult. And this piece of space is because we are here.
Okay, so thank you so much, Jorge.
Oh, thank you so much.
Thank you all for watching the 7th episode of Breakfast with Jorge. Stay tuned with us to know about the market volatility, and drop your thoughts about what do you think about the market in the comment section below. Thank you so much.